Hey, welcome everyone. Pat Mitchell here with TrickTrades, and today we're going to be going over one of the most requested videos that I get. Throughout the years, I get asked all sorts of questions, and tonight we're going to be going over how to set orders, what types of orders, the different types of orders that you can use. So we're going to be going over market orders, limit orders, and stop limit orders, buy limit orders, and I'll show you exactly how to implement them into your day trading. So let's get into it.
First, we will start with a limit order. Now, these are levels that were placed on the chart. This is Thursday, just because that happens to be what's up. And I'll tell you exactly how to get in on AMD using these orders. So, let me get zoomed in. And we took this trade, by the way. It was a beautiful trade. Okay, now these levels are very important. So as it comes screaming down into this level, we take the trade. Now, how do you take the trade? Using these orders. Now, first, if you want to mark it in, that's fine. So let's set AMD up here, plug that in, and then we would plug in a market, smart market. You got your shares. We'll just use 100 because it doesn't matter. And as it comes into this level, right, it's coming into this level, we have faith and support, you simply would hit, now that you have the right amount of shares and the right order type, you would just hit buy. Instantly, you would be in, okay? Now, people worry about getting bad fills. Do not worry about getting bad fills. These are extremely liquid stocks. You're not going to get filled worse than the bid or the ask. I'm telling you, you've been lied to with this, okay? Now, with penny stocks and low floats, those spreads can be pretty wide, and that's why you would want to use a limit order on penny stocks. I highly advise to stay away from penny stocks, especially as a new and struggling trader. These higher price stocks and proper stocks, what I like to call them, trade a lot nicer, a lot easier. They follow the rules. I have a 7-part guide coming up for you guys that's going to be free, that you can have emailed to you, and that's going to be coming out very shortly, so stay tuned for that. So with this, that's how you would get in. Now, you would have a stop accordingly, and that's about it. You usually want to base your stop at the next technical level, so I would put it here if it broke this 29.86, so you got about a 12-cent stop. That's about it. Looking to get it back into, this pre-market range would be nice. The opening price first, and then this pre-market range. So you have way more than a 2-to-1 risk-reward ratio. So that's how you would mark it in. It's super simple. All you do is literally just put the amount of shares in and click buy when and where you want to buy. Now, for a limit order, let's go to a limit order. Okay, so we know our price. We have predetermined levels. That's how we trade at TrickTrades. We know that this 29.96 will be tested 8 times, 7 times, 9 times out of 10. It will test this level, and it will bounce there. These aren't just technical setups, they're psychological setups, and they're setups based on human nature. You need to remember that. That's why there's such a success rate with this strategy, is because it's based off of human nature. It's not based off of fundamentals or technicals. It's based off of human nature. So all of that said, we know the price that we're looking to get this stock into. Now, as it's coming down into that level, we want it to just fire off. We want this order to basically be automatic. As soon as that price point hits, the order will be filled. Now, if you don't set it correctly and you set it too tight, you'll most likely miss it. Now, these stocks will generally test this level within a couple of cents, okay? So you know that you can set a pretty tight limit. So how do we set this? So for the price that we want on AMD, we would put 29.96. That's the area we want. Now remember, the 30 is right there. It could hit that 30 and bounce very easily because it's a whole number. So why don't we set that price for $30? Okay? So then you would simply hit, as it's opened up and it dips down, don't get afraid of red, guys. Don't be scared of red as it's coming down. You have to have faith that these stocks will bounce and support and buyers will come in, because they do. Look at where the volume came in. The volume came in just as it hit that level, right? It proves that this level is very sound. So you hit buy. That's it. Okay? Now, as it comes into this level, your order will be out. It'll be in the order box. One sec. Well, it's after hours, so of course it's not. Okay, so you hit your limit, you hit buy, now your order is out there. Now, as it comes into that 30, it will trigger. It'll trigger and it'll fill that order. Now you're in. Again, you would have a stop based off of a technical level, which is, we'll call it 29.86, and you just let it run. You don't care even if it breaks this level by a little bit. That's fine. You let the market take you out, period. Okay? And then you simply would peel out along the way. That is a limit order.
Hey, I know, sorry for the interruption. Pat here again. I just want to remind you, ass, gas, or grass, ain't nothing free in this world. Nobody rides for free. In order for payment for this video, you gotta like, share, comment, and subscribe. So, come on, don't be cheap. Do it up. Thank you. Let's get back at it.
Now, how to buy breakouts. I get this all the time. I am not a fan of breakouts. There is one very specific breakout pattern that I will buy, and it has a lot to do with shorts and where shorts are, where they get squeezed, because now you have two areas of buying pressure. You have people buying the breakout, and then number two, you have shorts getting squeezed. It basically gives you, it's like a rocket-fueled breakout, right? And that's what you're looking for. You want to see movements like this. Now, this was a very predictable movement because of shorts. Now, I discussed this in TrickTrades, so don't be shy. Definitely come check us out. So, how do we buy this range breakout? Okay, so let's say now I'll give you an example of why you would wait for this, and I'm sure this is what you would be thinking while you're in the trade. So as it comes down into that level, it produces a double bottom, which would have been another trigger to buy. Okay, but let's say you wanted more confirmation. A lot of you want more confirmation, which actually increases your risk. All right, so instead of buying down here with a 10-cent stop, now you have this, right? You got a 20-cent, 22-cent stop plus, and your next technical level down would be even lower. Okay, but let's say, for the sake of argument, for the sake of the video, you want to buy this breakout without having, you can set your order down here, and because the range, right? So you want to set your order, and then if it breaks this range, you're in. Now, another way to get in, or another example would be pre-market highs, or a simple breakout. Okay, so you can use this order type in any of those situations. So let's draw a level here just so then we can see what's up, what the price point is. So we have $30.15 a share. If that breaks, you want to be able to get in, but you also want to be protected without getting screwed on a bad fill, which isn't going to happen, by the way, but this is how you'll set it. So you put a stop order in. Stop type is a limit. 30.15 is our trigger price. Now we want a limit price. What is the most that you're willing to pay for this? I would say somewhere within a few cents, or else you might as well just mark it in, right? So I would take it to this. You see this little bit of resistance here? That's where I would take it, because most likely as soon as it breaks, it's going to pop up into this, and then there'll be some volume there to suck it back down. It'll reject for a slight second, which actually you can see it did do that. Let me zoom in. See the wick of this candle? Do you see how it just popped up, came into that level? Just that little resistance level? See? Right? And then it rejected. Any type of support and resistance, there will be volume and there will be orders there. Remember that. So you would set your limit at, let's call it 30.20. And that's it. As it's consolidating and you want to buy this breakout, you would set your order just like so and hit buy. And that's it. Now remember, this is after hours, folks, so that's why it says send rejection buy or buy stop. These three types of orders can be powerful. So you've seen the three different ways. Now I want to show just another example of a limit order, because I know that this really comes up a lot. So on NVIDIA, you have, let me clear this. You have morning lows, okay? You have morning lows. Look at this beautiful double bottom. We also caught this as well here yesterday. So you have a definitive area of risk, the 180.18, okay? Now, as it pops up and as it starts making its way back down to support, let's say you don't have the confidence to mark it in. You're going to get spooked out by these red candles, okay? So how would you get in? Limit order? What's our price? 180.18 cents a share, okay? And remember, folks, you don't need a lot of shares with this. There's an extreme amount of range. I'm going to put this quickly into perspective for you. So from your entry price at 118 or 180.18 up to highs, if you caught that all the way up to highs, is $2.88 a share. Okay, so if you took even just 100 shares, you're looking to make 288 bucks. Now remember, this isn't a home run trade. There's nothing special about it, right? But it's a scalable strategy, and the bigger your account grows, the more shares you can take. You can also take options on it. So let's get back to the lesson here. You want to get in at 180.18. But remember, it doesn't mean it's going to test that right to the penny. So you want to set it a little bit above. So let's say as it's coming down, you want to hit this 180.40-ish area. You've given yourself more than enough room. You can even tighten it up, guys. Okay, you can tighten it up. It's at roughly 180.20. Let's go 180.33. That's the most you're willing to pay. That's where you're comfortable. That's where your risk would be set and you're comfortable with that risk. And then as it's coming down, okay, you just hit buy. And as it comes in, it'll trigger at that price and boom, that's it. That's it. That's all, folks. That's how you set orders.
Well, there you have it, folks. Pat Mitchell signing off here. I hope you enjoyed it. I hope you learned something. And if you want to become a real trader, trading real stocks, make sure to check out TrickTrades.com. Like, share, and subscribe below. And don't forget to comment. And again, thanks, guys. Have a good day.